Morning all, how are you all doing? Morning Evil, how are you? Morning everybody else that's here that hasn't said morning yet. Morning jury. I had to double take then. Look at the go away pen. Look at the confluence today of the indices. Almost exactly the same price action on the DAX and the FTSE. It's like it's the same instrument today. It's bizarre. I've never seen this before. It's just exactly the same price action. It's very, very weird. So short on both today. But that's weird. This is the we've just had some news come in this morning. Russia fired an intercontinental ballistic missile as part of an overnight attack. So I think this is the drop, basically, scaremongering off the back of that news that's just come in. So it happened to happen pretty much the same time as that news came in. So I think that's just a knee-jerk reaction from the markets, again, to another escalation, particularly potentially in Russia. Yeah, look at this price action. It's doing the same thing. Very weird. I've not actually seen it do this much confluence, but anyway. So short DAX and FTSE this morning. We'll have a look at that in a minute. Morning Vitali, morning Sarah, how are we doing? So today basically I'm going to do an update on the other strategies that we've been working on, and I'm going to use today to do some analysis on intraday strategies and plan out an EA basically to build and test statistics, basically get statistics on all the intraday, the main intraday strategies, if you like, to try and build an EA that can logically go through step by step throughout the day, just trying to generate profit on a daily basis, basically. So it's kind of like a prop EA, if you like. Everybody keeps asking me, what's the best EA to use for prop? Which of your products is best for prop? Which set file is best for prop? Everybody wants to trade prop, and I understand it, but obviously prop has a lot of downfalls. So I'm trading prop at the moment with Top Step, which is futures based rather than CFD based, but principles are the same. They give me $3,000. That's it. So they give me a 50 grand account or 100 grand account, and they say you've got three. That's it, basically. So you've got a limit that you can use. So it's about building an EA that is designed to concentrate on looking at what the daily restrictions are and working within daily restrictions, which means stopping trading after a period of time and taking the A+ setups, basically. So we're going to try and create an A, a B, and a C setup intraday. It's about trying to recover previous day's loss. This is one of the big problems that people have with prop and passing evaluations is they'll have a bad day, and then they'll blow it. So it's about, if you have a bad day and the first trade of the day is positive and it recoups yesterday's loss, stop there, come back and do it again next day. Yeah, so it's about trying to control the number of trades and stop over trading, because that's what basically kills people. So that's the idea of the of this project, basically. And I'm trying to kind of mimic what I do intraday, and try and build that logic into an EA. So for example, with the SIH, I'm looking for specific things to happen every day. So I'm looking for the opening range breakout. If it's a clean break and we get to an obvious point of support, and I've got 2.5R and I'm looking for 3R, I take the 2.5R because of that. And it's trying to mimic this behavior in an EA with automation. And obviously then looking at if this hedges and this clean breaks and that makes more than that, stop for the day. You've done it. Well done. Now stop trying to overtrade and make too much money. Yeah, that's what everybody does wrong. So it's looking at the portfolio approach as well. So I'm going to plan that all out today. We're going to look at the indices, because it's specifically, I'm going to target indices with this, but this could be used in forex as well. Some of the strategies that I've got prepared and planned will work on forex, so it can be used on other types of trading, and obviously use it for your, our own use as well. But as we know, intraday trading is incredibly tough because you're trading chop at the end of the day. So well, that's basically what the plan is. So I think I can't remember who it was. Someone was interested in the support resistance bounce EA and developing that. That's going to be part of this. So it's going to be kind of like an all-round EA that could be used on any time frame, any instrument, but specifically it's designed to do one thing, which is make money, obviously. But it's going to be a choppy P&L because it's going to be trading chop. Therefore, you get a choppy P&L. But there's nothing wrong with using it on higher time frames as well, and that's all the stuff that we can test. DAX breaking short again. So that's the plan for today. Morning, Cyril. Morning, Phil. Morning, Lucas. So quick updates first of all. Let's start with the news, actually. Let's do the news first. So that's obviously the main news that's come in this morning. Markets have obviously had a quick, holy crap, reaction to that. The fact that Russia has fired an ICBM, I'm not quite sure what the main problem is here, whether it's an intercontinental ballistic missile because they're bigger and badder, or what, I don't know. But I'm assuming the reaction and the reason this is red news is because it's actually an ICBM. Obviously, they are bigger, more powerful rockets. So that's obviously happened. Other than that, overnight, there's been a load of talk out of the Bank of Japan, but nothing particularly exciting. So nothing else really to report there. We'll have a look at the ADRs and everything this morning as well. Morning, Lucas. Morning, Travel. New EA. Missile pullback EA. Perfect. That is going to be part of it. Yes, actually going to be part of it. Pullbacks. So yeah, we'll look at that. So today's forecast news. Obviously, yesterday we had the CPI, which we covered in the stream because it happened in the morning. We did the afternoon stream yesterday. Today we've had Bank of Japan and RBA is talking, I think, should be talking now, but I can't see anything coming out at the moment from Australia. The only news we've got today is 1:30. We've got unemployment claims, which are forecast to be pretty much the same as previous. So there is a chance of a shock off the back of that today. If you've got a position trade at EA, I pushed out a new update yesterday, just to let you know. 1.72. The only change in it was a quick bug fix. So these timed exits, when I coded these in, I forgot to code in the button trading only logic onto them. So if you had, like I had yesterday, as few in the stream yesterday, you saw me closing out some loss yesterday accidentally. If you have button trading set to true, none of this works. Nothing works here. Yeah. The whole purpose is for you to use the buttons. Yeah. The buttons then get you in, the VPS takes over. So basically what happens is all the logic on everything you see below here says if button trading equals true, don't do anything. Yeah. I forgot to add that logic into the timed exits because it was an addition I added after. So what I had accidentally set up was that set to 8, and every time I changed to an instrument that had trades on it, it went, it's been trading more than 8 hours, and it shut it because it wasn't using that logic. So I fixed that yesterday. I pushed out an update. So just in case you are using that, that would be a problem. So that's fixed. Yeah, so news today is unemployment claims. Just going over to the VPS. So you remember on Tuesday, we looked at the pullback strategy, and I said this is looking like a phenomenal day. Yeah, we had I can't remember how much it was, but it was something like $1,500 worth of profit, open P&L sitting there on Tuesday. It closed out that day with a $500 loss. Yeah. Basically what happened was the yen moved down really rapidly, and it was looking like it was going to be a massive banker day. Don't forget, every TP on this strategy is worth roughly $500 to $1,500, depending on the size of the day, etc., etc. So there's massive upside potential when one of these trade works out. It's just we haven't had one work yet. We've just had a lot of chop. Since we started this, we haven't had that happen. Yeah, and the reason we built this EA is to take advantage of trend, and we haven't had it. So it's just getting chopped about a bit at the moment. It's down 5.5%, but we were sitting at 6% profit on Tuesday, and I could have shut the whole lot out and gone da-da instead of taking a 2% loss. But I'm letting it play out because I want to see it play out exactly as we did in the backtesting. Morning, Mark. So yeah, that was a bit of a shock when I opened that up the next day, and I was expecting to see a nice big P&L. What I got was that. So I'm going to let it run. Just looking for something like that. That one trade there, for example, on the US dollar yen is worth $500. That's a third of that loss gone. One trade. We just haven't had one hit yet. What's happening is we're getting lots of movement, and lots of because obviously we've got a trailing stop running. We're getting lots of stop outs with tiny little profits, and then we're getting full stop outs which are cancelling out the tiny little profits that are being made, which is what's keeping it like fairly low. If you look at the number of trades this has taken, it's got 5% drawdown, but it's taken a hell of a lot of trades. Look, I mean, this thing's trading constantly, but look at it, it's all stop losses, but they're not losing stop losses. We've got, that's a winning stop loss, that's a winning stop loss, that's a winning stop loss. Yeah, these are tiny little stop losses. Look, 50s, 70s. So it's doing its job, which is designed to reduce risk. So when a trade gets underway, we reduce the risk on it, and then if the trade doesn't work out, we don't take a full loss. So it's doing its job perfectly. It's all working as it should do. We just haven't had a trend hit yet. So I'm going to let it run. Today, for example, we've got pound yen running. What I should do is put that on. There we go. So you can see here, the stop loss risk at the moment is $566. So on these trades at the moment, the maximum loss we can take is $566. The TP, if hit, is 2,700. That's gone, completely gone, wiped out, and we're in a beautiful profit. We just need a run. We haven't had a trend yet. Yeah, and this is why I said about trend strategies when we've done all the sessions on the 3 types of strategies: breakout, mean reversion, and trend. Trend and breakout have a strike rate of between 30 to 40%, and they have a lot of that because you lose a lot because the market doesn't trend most of the time, it ranges. So it's not unusual to have your P&L do that, and then it does that, but it's only going to do that when the yen and the Swiss decide to actually bloody trend. So it's frustrating seeing that sitting in 6% profit the other day and then opening up a 2% loss. But that's what it is. And that was based off the missiles. Yeah, that was Trump. Well, not Trump. That was the US missiles firing, or the UK missiles firing, one or the other. And the market going, holy crap. Yeah, but we didn't get that. All we need is that. We just want a trend. That's it. So that's working out. It's doing everything it should be doing. We need one day, and we will get a beautiful profit. We just haven't had it yet. The lazy trader EA, excuse me, consistently banking still. Hasn't had a losing day yet, which is great. It's only up 1.3%. It's scalping tiny little profit. It's working very, very well. We've got 2.4 open drawdown. The vast majority of that, 1.8% of that, is on the pound US dollar. The rest of it is all fine. So what I'm seeing here is exactly what we saw in the back tester, which is it banking, waking up to profit every single day, seeing a load of trades on, and then in the afternoon when I check it, that's gone. It's all turned green down here, and we've got 1 or 2 which are still running, and those are the ones which are going into trend, and obviously we're waiting for those to unwind, and they will take days, weeks, potentially to unwind. Exactly what we saw in the strategy tester. So that's all working absolutely fine, doing exactly what it should be doing. The pound US dollar is the main fly in the ointment at the moment, and as you can see, why? It's pretty obvious. It's just done that for 5 days, so we can't get out, but we're not going to make any losses, we're not going to make any profit. It's just going sideways. Since the initial trade was taken up here, we've pushed down for a day, and then we've gone sideways for 1, 2, 3, 4, 5, 6 days. Can't do anything about it. I've put the excuse me, I've put the support resistance propulsion indicator on all to the charts of the VPS, so that I could see the average here, because we're looking for a $10. That's all we want, is a $10 exit. We're looking to get out of the trade because it's wrong. Yeah. So what we need today is an ADR hit, which is 342. So we're not going to get one today, but we could do. If unemployment claims in the US are absolutely terrible, yeah, we could do. But that's all we need. And as you can see, every day we're getting a move of that sort of magnitude in. So we need 2 days, basically. So by the end of the week, tomorrow, we could be out of this one. That one's sitting down there. Everything else is sitting down there, banked. We're flat. Job done. So it's working absolutely fine. Now, I found a problem with this. So I mentioned this yesterday in the stream. What the problem I found is, I need to find one that's been taking trades. The logic of this strategy is that when the price is pushed, if it's a bull day, we short it at 9 o'clock. If it's a bear day, we buy it at 9 o'clock. Yeah. So it's basically playing the pullback. We're looking for the market to pull back, and we're taking that little bit of profit out of the market every overnight session. I don't understand why, but there, for example, we had a bear day, we bought it, perfect. There, we had a bear day, we bought it, perfect. This day was just about a bear day, we bought it, perfect. This was a bull day, we bought it, it should have sold it. And I've identified this happening on a number of pairs. So there, for example, perfect. Bull day, sold it. Exactly what it should be doing. Bear day, we should have bought it. We didn't, we sold it. Now, it doesn't matter because it TP'd and it would have TP'd. So there, it worked. We had a bear day, it bought it. Perfect. So we had a bull day, we've bought it. See, this is wrong. We've had a bull day, we've bought it. We should have sold it. Yeah. So there's something wrong in the logic. I spent all morning yesterday going through the logic of this, and I can't figure out where it's getting the opposite order from at all. So there's multiple ways of employing logic to say today is bull and bear. So the way that I've done it initially in this version, in version 1 and version 2 of the EA, was the easy way. There's a there's a piece of code which says bull candle, bear candle. I don't think that's working properly. So what I've done is I've recoded version 3, which I'm going to test quickly this morning, which I haven't done yet. And I've now changed the way that the logic works to say, if the close of that hourly candle before we take the trade is below the open price of the daily candle, yeah, it's a bear day. Yeah. And vice versa. If the close of that candle there is above the open price of the daily candlestick, it's a bull day. Yeah. So I've changed the logic to be working on open price and close price rather than the logic of bull candle, bear candle, which is pre-built code. So I've basically just changed it back to use this price and this price. If this price is above this price, it's definitely a bull day. So hopefully that will fix the logic. The other thing that I've got in there is another piece of pre-coded logic, which is the distance of the wick. which tells us that we are within a distance. Now, I might remove that because there may be a problem in that code as well. But what I'm going to do is I'm going to run the new version first to identify which block of code was problematic. And then if it starts to take trades exactly the right direction every day, I know it was the previous bit. Now, the thing that I've found with this problem, I didn't notice the problem. Why? Because it was doing exactly what it should be doing, which is banking cash, right? But here, clearly, it should have gone long and it went short. But what I'm finding is that it really doesn't matter which direction you go in, because you're trading the Asian session and you're looking for a 0.3 ADR move in the Asian session, which it does, because the Asian session is always, virtually always, range bound. Yeah. So there are instances where it would make a difference, but the vast majority of the time, we're talking 70 to 80% of the time, you could basically flip a coin at 9 o'clock, go for a 0.3 ADR move and make money, a la this, because it's doing it wrong and still working. So all the testing that has been done on this has been done on the logic that was there. And in the back tester, and this is the problem I'm finding, in the back tester, I couldn't see it going wrong. So I'm going to retest with version 3, which is this, and see if I can identify this going wrong, basically. So there we go. So that is a bull day, and it sold it. Perfect. So that's worked as it should do. Yeah, this particular day. Oh yeah, there we go. Right. So then we had a bear day. So there is the opening price. That is the closing price. Although it's really, I mean, the candlestick is horrible. It's that. But it is a bear day and it's gone long, which it should have done. Yeah. So that logic is working absolutely spot on as it should do. Just wait for that to play out so we can test some more. So that's taken a second entry. Scaling distance is 358 minimum. 563. Perfect. It was a bear day, so we took another trade. So that is as it should be. Out. So we've taken a short because we had a bull day. Second entry. This one might take a while because that's a massive, that's a news event, obviously. Just wait for that one to get out. But, you know, this is what I say, that things like the pound US dollar, we could be sitting in it for weeks, but we're using tiny little risk, aren't we? So it doesn't really matter because we're using small risk, and it will scale out automatically after 6 positions. So there we got a bull day. So it's a down day. So it bought. Perfect. Out. Okay. So didn't take a trade there because at that point, the distance from there to there was greater than the input, which is probably 30%. So that is more than 30% of the full daily candle, therefore no trade. And again, we can, you know, we've tested this. It doesn't really matter, does it? Again, same here. No trade. The wicks are too big. There we go. Sell because it's a bull day. Add. Buy because it's a bear day. Sell because it's a bull day. So the logic seems to be working fine, doesn't it? And this is what we saw previously. So I'm going to stick this version on the VPS, just replace what's there, exactly the same settings as previous, just with this renewed logic, because I want to see what it does. I want to see where the issue is with it. But the comforting thing is, yeah, that when you robustness testing, what we're looking for is for variations on a strategy to be profitable. So if we've got an input and there's 10 different variations of that input we test and they're all profitable, it means that it doesn't really matter what happens in the future. If some of that stuff happens, we're going to make money. The comforting thing now is with this, it's doing it completely bloody wrong and still making money. Because all we're doing is we're relying on the Asian session. If you look at all these days here, as this is a good example. Yeah, look at the end of every day and then look at what price did the next day. Look at the end of the day and what price did the next day. End of the day, price did the next day. End of the day, price did the next day. End of the day. That one was an anomaly. We didn't actually go down. Yeah, but we would have bought that day because it went down that day anyway. But that day, price went up and down. That day went up and down. That day went down. So there's another one. But look at the majority of days, the Asian range will just do that. So flip a coin. It doesn't really matter. But if we've had a bull day, we're probably expecting a pullback. Yeah, and that's the whole edge of the strategy, isn't it? So, or is it? Maybe it isn't. But it works. So we'll see how that new version gets on. And I just want to double check that logic basically works. Well, this is a big one, look. Taking a bit of heat on this one. So 1, 2, 3, 4, 5. So next trade will be the last one. So taking 1200 drawdown, 12%. Or is it 12%? This is a 50k account actually. So, and the other thing with this EA as well at the moment is obviously it's just using 0.1 lot size, so it's not taking the correct risk on anything. It's just basically going, get me in with 0.1. There we go, out. So the idea of this test that I'm doing, this forward test, is to make sure that it does what it should do. We'll need to adjust the risk on it to make sure that it's risking the same amount of money on each trade. Otherwise, what you're going to get is you're going to get something that works really well and banks like 20 quid a go, and you're going to get something else that works and only banks 5 because you're using 0.1 lot size, and 0.1 lot size on one instrument is going to give you a different result. So we need to use a monetary risk thing basis on it at some point, but that doesn't need to be programmed in at the moment. So yeah, that's good. Could it be worth doing a quick test on the lazy strategy in situations like GU, even if you're in a position short with 2 to 3 trades and it pulls back, but not enough to close the position, to still take the order in the opposite direction? We could do, yeah, but that's a totally different strategy. So this is a position trading strategy, not a hedging strategy. But could do, yeah. I mean, you can do anything. It just means completely recoding the EA to use different logic for exits. So yeah, it's another, this is what strategy development is all about. We need to let's get this working first as it should be, and forward test it, make sure it makes money nicely as it does in the back test. That can then be used. Then we could see if there's a hedging version of this strategy that works. In the same way there's a hedging version of the position trading strategy that works. So but yeah, it's good. But yeah, this logic seems to be perfect. I mean, it's working exactly as it should be. So yeah, but then we thought it was working exactly as it should be on the previous version, which it seems is not. Anyway, yeah, nice. So yeah, we'll let that one. I'll put that on the VPS today. I should be able to just replace this version 2 because all the inputs are going to be the same. Yeah, so I'll just replace that at some point. But yeah, it's banking nicely. It's good. It is good. Right. So let me quickly see how the ORBs are getting on. Hedged on the FTSE. Okay, so they've got out of sync now. So I've got a FTSE hedge. Oh, just hedged it. Look at it. Yeah. So looking for DAX to break clean today. TP1 on the DAX is sort of halfway in there. So we need it to break yesterday's low, basically. And then once we get a clean breakout yesterday's low, I'm just going to move TP up to just above the monthly level, just in case. Which month is that? Yeah, I mean, it's probably not going to be reactive, but in case it is reactive, I'll get out there. And then TP2, I'm just going to move that one up as well. It's just shy of ADR, and PDL, previous day's low. And hope that somebody fires another whacking great rocket, because that's what happens when a whacking great rocket is fired. So let's have some more of those, please. So the idea today is try and get out the hedge. So again, this is what we're going to discuss this morning, intraday trading and how to do intraday trading. If you're going to trade more than one instrument, look at that and that added together. Yeah, so I can close that out right now and close that out right now and walk away and go, that trade didn't work, but I didn't lose any money. And that's the whole purpose of what we're going to try and build. So we'll let that run. ADRs today, you've only got one, which is Aussie New Zealand this morning. That is a clean ADR as well, so straight up there. We were waiting for the Aussies to talk this morning. Still nothing. Doesn't look like Bullocks showed up to work this morning. So yeah, no, nothing there. So that is also a weekly range hit. So that's an ADR and an AWR. I'm short on that at the moment. I will be getting into next short today. Blimey, look at that. So it's way above my next short level. So I will be taking the next reversal on that one off of ADR, which will bring the average up into there. And I'll look for an exit back down here somewhere. Nicely extended above the 80 on the 21 RSI as well. So that's a good looking one. And weekly range hit. So that's your open of the week. Obviously, that's a spread candle, but that is your average weekly range already achieved. So potential for a drop on that one. A couple of RSIs as well on Aussie New Zealand. Euro CAD's also extended to the downside. So good long opportunity potentially there. That's been embedded. So we're watching this propulsion area here. Potential for bounce. RSI extension, so that's a good looking little long. I'm going shorts on that though because of the swap. We've got pound CAD also extended to the downside. I'm long on that one already with 2. So third entry going in on that today if it continues to drop. Looking for pushback up into there. But if basically we're breaking out of this monthly range now. So next stop really is 300 ADR away. So we're looking for some areas here that potentially we could get a bounce out of. So yeah, it's collapsing a little bit. What's US dollar CAD up to this morning? Because I'm long on that as well. That's not gone anywhere. So I got long on that at the minute, but no movement. Morning AZ. So yeah, we can try that. Evil, we can test that as another option, but you've got to do things step by step. If you start chucking loads of stuff into it, it's just going to get complicated. So it's something we can look at as a V2, if you like. So yeah, but the problem with, I can't just put trade in both directions into this version of the EA because the logic on the exits is looking for an exit on all trades. So I'd have to reprogram it so that it, whenever you're doing any hedging, obviously there's 2 ways to get out of hedges: the total P&L or the long and the short P&L. So it's either a combined P&L of long and short or separate P&Ls on long and short. So to do that, you have to code in the long and the short P&L separately and do calculations to make the total P&L and all that sort of stuff, which it hasn't got. So I can't just go trade both directions because it won't be able to do the exits properly. It will, but it would have to wait until there's $10 achieved, because at the moment it says if there's one trade, just get out of TP. If there's more than one trade, get out at the moment £10 or $10 or whatever the target is. If you have one long and one short and neither of them hit the TP, it will sit there hedged until it gets to £10, which means it's basically turned into a hedge EA. And as we know, hedge EAs turn into expanding hedges and you never get out of them for months on end. We did a session on that. They're annoying. So it would need to exit. I'd need to break it down so it's got a separate P&L for both. Let me just remove that countdown because we're not doing countdowns anymore. Right, morning FTNet. So the strategy that I'm going to be looking at building out is going to be a kind of intraday EA, but it's probably going to be usable for many different strategies. We've just broken yesterday's low on the DAX, which is nice. what's the TP there? Let me just quickly see what the TP is. So that'd be 700. I'm just going to. I had a good day yesterday, and this is part of what we're going to talk about today. I had a good day yesterday, so what I'm going to do is do that and get both exits at the same level, which is going to bank me 700. It's going to take that 300 off, which means I'm going to bank a clear £400 today. So if that hits that TP, I'm locking in 400, yeah? And this is part of what we're going to discuss today. The reason I've made that decision is because yesterday I had a good day, and I've had a bad day before that. Yesterday paid for the day before. So this day and Monday together combined will make me a profitable week. That's my decision-making process behind getting out of that trade. Yeah, so this is the stuff we're going to look at. So my US dollar CAD target is at 200 ADR, is it? To the downside, down here. Well, I want it to go long, sorry. I've flipped the other way now. So you can pretty much guarantee it's going down. So yeah, that's a good target, weekly low. That's your break even or your target. Okay, your target, yeah. So I'll be in trade number 3 then and looking for a bounce on that leg if it does that. So yeah, good target. This area and this area are part of this accumulation. So that's balance, breakout, add. Likely we'll get some movement off of that level. Right. So what I will do is, I think, come over here. And use this. So let me just. Okay. Right. So it seems like these past couple of months you've been doing really well on SIH. Yeah, it's killing it at the minute. I think I'm up 12 grand this month so far. Yeah, 11.2. So I'm up 11 grand so far this month. I'm on 21st, so I'm on for a 15k month this month, which is great. But obviously not every month is like that. This strategy specifically, SIH, it's hit and miss in the fact that it has a lot of kind of stagnation months where it makes a little bit or it loses a little bit, and then it has quite a few months a year where it makes a lot, like this month. So it can easily do 50k a year, but it's not regular, if you see what I mean. This is the first month we've had an earnings fortnight which has generated massive profit. So the breaks we've had this month have been very clean, and we've had a lot of them because the earnings have taken off. Previous months we've had earnings fortnights, or previous quarters we've had earnings fortnights which have been dead. So it does seem that it's quarterly based, a lot of the profit out of this. I haven't done an analysis on it, but I think if you did back tests on it and looked at the profitable months, you'll find a lot of them are around about earnings fortnight, which is every 3 months. Also, triple witchings make a lot of money. We don't get them very often, but when you get a triple witching, you get a huge break and a huge profit. End of month. So there seems to be a lot of seasonality with stock index movement, which is fine, but it's not always predictable. Like everything, sometimes it does, sometimes it doesn't. So you just have to play it every time and hope that it comes out as a positive at the end of it. I'm tempted to grab this. I'm not liking this rejection at yesterday's low. Although we are still dropping on the FTSE, so we'll see. Right, so this strategy. or this EA, I should say, is going to operate mainly on the 5-minute or 15-minute time frame. So what I'm trying to build, what broker do I use for SIH? DarwinX. Any you can use any broker as long as it's got a tight spread. It's just about getting the spread as tight as you can, basically. And if your broker starts widening your spread, just move broker. That's all you can do with indices. And this is partly what we're going to do today. Obviously, everything you trade. Look at this is Robo Forex's spread. It's tiny. Yeah, Robo Forex's DAX spread is tiny, but their spread on other things is huge. Also, Robo Forex don't have the FTSE, and I want to trade the FTSE, which is why I'm on DarwinX. Yeah. What is my Darwin ticker? I don't have a ticker. Don't have one. So yeah, so basically what we're going to do is basically put together a plan for intraday trading. Okay, so there's two ways that we can do this. It needs to be targeted for specific trading strategies on specific instruments. So for things like stock indices, we obviously have the opening range breakout strategy. So the ORB works at the open. Unfortunately, there is no open on forex or gold or anything else like that, so we can't use commodities as much for that type of strategy. So we need to put together a list of strategies that we know work intraday. So there's things like the gap fill. Yeah, gap fill strategies we know work intraday. Opening range breakout we know works as well. So putting together a list of strategies, and the idea is behind this specific EA, it's a little bit like the opening range breakout EA or the price action toolkit EA, in that we need to have a set target that we're aiming to achieve. So the thing that kills everybody with intraday trading is over trading or revenge trading. One of those two. It's always one of those two. So you'll do a trade, it will work, brilliant. Then you'll do another trade, it will work, brilliant. You go, I've made 1,500 a day. You'll go off happy. You'll come back tomorrow. You'll repeat it, and you'll go, I've made 3 grand, and then you'll lose 4.5K on the next day because you're expecting the profit to come along. It didn't, so you got cross. You took more trades and you blew it. Yeah, whether it be prop, whether it be your own account, that's basically what happens with intraday trading, because you are trading algorithmic chop, which is totally random, but there are patterns that play out every day. So the strategies that work the best intraday are bounce plays, trend pullbacks, and breakouts. Funny enough, there is only 3 strategies, but with intraday trading, opening range breakout works very well, as we know, as we're watching today unfold. Yesterday's high, previous day's high zone bounces work particularly well. Weekly levels will work well intraday, although they are often levels that will have a lot more time spent at those areas. And trend pullbacks, so propulsion gap retests. So if you are going to go into a trend day, yeah, those entries are good ones to take. Very low risk, very good reward. So the idea for me behind prop trading and intraday trading is to set a target of X, and when that target is achieved, stop. Yeah. So the other problem with this is when you have a good day, you think you're walking on water. Think back to the 5 steps to becoming profitable. Yeah, when you have a good couple of days, you are on step 4, walking on water. So you go, I'm invincible, I've sorted it, I've got it, and that is when it all goes wrong, and you end up going back to step 1. So if you set yourself a daily target of hitting a monetary value and then stop trading, it stops that walking on water happening. The other thing is, with a lot of prop firms specifically, you have a consistency target. So for example, Top Step, who I've got evaluations running with at the moment, I can't have more than 50% of my profit on the evaluation occurring on one day. So it means if I've got a 3K target, I need to set a $1,400 maximum profit per day. Because if I do $1,600, I can't have that day because it's over 50% of my target. So you have to work within the restraints, obviously, of prop as well. And obviously they have a daily loss limit as well, which obviously you can't go beyond. And it's good practice with intraday trading to do that, because if you get into this price action where you're trying to take breakouts in here, you are going to get killed. And if you take 4 trades in here at $300 risk each, that's $1,200 down the drain. You should be setting a limit saying, this is not my day, or rather, this is not my market. If you're a breakout trader and the market's doing this, you aren't going to get any trades on today. Yeah. So, but there's different types of strategies we can use. So I'm compiling a list of what the EA needs to have. So first thing, obviously, is targeting. So there will be an upside target and a downside target, which will be set in stone. So the EA will say, have we achieved our loss target for the day? If so, no trading. Have we achieved our profit target for the day? If so, stop trading. My ideal is, like we had yesterday with the NASDAQ, my ideal is that. Yeah, I made $1,100 on that yesterday. Done. That's it. Done. Hour. I'm finished. I'm off. I've done my hour's work. I've made my money today. I can now pay my mortgage. I'm going. That's the ideal. So what the EA needs to do is it needs to go, I'm going to start today on the indices with an opening range breakout trade. And I'm going to try and take the opening range of whatever, pre-market, 5-minute, 15, whatever you want to decide. One of the interesting things I'm looking at the moment, which Hogue at Top Step trades, is the 1-minute opening range. So basically what he does is, if we are opening below yesterday's close and we have a 1-minute range, he takes a long from the 1-minute range, because the idea is we're going to go for a gap fill. So wait for what they class as the initial balance. I class the initial balance as 5 minutes. Some people class the initial balance as 3 minutes. Hogue classes the initial balance as 1 minute, which is fair enough. In futures, that might be the case, but it's pretty much the same on everything, isn't it? So it's not just futures. But so you can define whatever you want to be your opening range, and you take an opening range trade. If that trade works and gets to the target that you set, that's it. You're done. There's absolutely no point in potentially giving this all back to the market because you think, I've got a brilliant trade, now I'm going to try a reversion. Oh, it's carried on trending. Okay, I'm now going to get in on this trend. Oh, it's mean reverting. Okay, so you've made 1,500 on the break. You've now lost 1,000 of that 1,500 because you tried to make more money. Target is target. Hit it, move on. Yeah, especially with prop. Prop, don't forget, our job in prop is not to make loads of money. Our job is to tick their boxes. Their boxes say you can't make more than, in my case at the moment, 1,400 a day, and I want you to bring back 3K. So what that tells me is you want me to trade for 3 days and try and hit a 1,400 target. Okay, so I will set myself up to do that. The EA will be told to try and make that every day. If it's made that in a week, stop, because I've passed. And then when that restriction is lifted, when I've got a funded account, do what the hell you like. If I can get a break to 7 grand, I'm taking the 7 grand, and then I'm going to stop completely and I'm going to take that money out. Yeah, so it's all about setting the rules in place. So opening range breakout is the first thing that we would look for. This is indices only. Obviously you can't do this in forex because there isn't an open, but there are other things we can do in forex. So one of the other strategies that I'm going to build into it is an ADR breakout. So when we find a range form that is lower than a percentage of ATR or ADR, I haven't decided which, both will work, that basically forms something that could be broken out of. The problem with ADR and ATR breakouts is they may well continue, in which case you just get stopped out constantly. Yeah, so they're not the best in the world because we want that volatility. But the other thing we can trade as well is in a volatility breakout pullback, propulsion gap. Yeah, so there's all these sorts of strategies that can be traded, but you need to do it in a logical manner. So indices, obviously they open. So first thing we're going to do is we're going to take an opening range breakout. We're going to try it. We're going to try it in the direction that we get first of all. And if that doesn't work, we're going to try it in the opposite direction. So if you look at indices, what you often find is we either do what we're doing today, which is a nice clean breakout to the downside, a pullback, and then a continuation. Yeah. Or what we do is we break out to the downside and we don't. We go back the opposite way. So it's a false breakout. So look at a daily candlestick. Yeah, it's this wick. Yeah, if this is the open here, this wick is the false breakout before we move up that side and finish with a massive bull candle with a wick on both ends. Yeah, so what we're doing is we're going, try that. If it doesn't go do that, stop out of it and go long and try and get that candlestick pattern. Candles can only do three things. We've already covered this in one of the other sessions. You only have three candlesticks. The market can do three things. It can be bull, it can be bear, or it can be indecision. Yeah, an indecision can also come in the form of a whacking great outside bar candlestick. Yeah, there's three things. Today, the market will either end up, it will end down, or it'll end up pretty much back where it started. There is nothing else. There is nothing else you can tell me that the market does. It does one of those three things. Fact. That's it. It's one of the rules of three. So what we need to do is to identify how to trade that. So at the open, it will either be a bear day, or they'll try and make a bear day, and then they'll make a bull day. Yeah, so we can take a break in the opposite direction. Or it's going to be an indecision day, which is also known as rotation. In which case, neither of our opening range breakout trades are going to win. So we're going to be -2. So once we've stopped out of both of our opening range breakout trades, we then need to decide what do we do next. Well, if the market can't decide what to do at the open, we do nothing. We wait. The option you have is you try to play the range that is forming with mean reversion. The problem with that is ranges are never like that. They are like that. Yeah, there's a million ways to get killed in rotation, a la this. Yeah, that's a symmetrical triangle break, but it's different. Again, another pattern we could trade. Yeah, but so after the opening range has occurred and we have our result, we then go, okay, either we made our money or we didn't. So what do we do next? Well, the market can't decide where it's going to go, so we'll wait for it to decide where it's going to go. If it doesn't go anywhere, we don't do anything, because we can't trade a market that is unidirectional. You only make money when the market moves from A to B. If the market moves like that, there is no A to B, so we don't trade it. This instrument isn't helpful today, but there's others that we can trade, and obviously this strategy will be run on multiples. So what we then do is we wait for a test of yesterday's high and low. So on this particular day, we had a break, which didn't do anything much. We would have made money on that. However, we then sat around for the rest of the day and did absolutely nothing. So the next thing to do would be to see if we test that and take a bounce, or see if we test that and take a bounce. Yeah. So we know that support and resistance areas work. That is that high. And look what happened the next day. Yeah. Admittedly, I think that is the open actually, isn't it? So we tested the open and we popped. So the ORB there would have been a short. We would have had long, oh, that didn't work, stop out, short, beautiful, done for the day. So that's the next step, is to then identify levels. So what I'm looking to do is use yesterday's high and previous day's high and zone them. So there's a video on the website about how to draw support and resistance correctly. It's not a line, it's an area. Yeah, so it's a zone where price reacts. Couldn't really pick a better day, could I? But that's not actually yesterday's high. But so we got that level there, that level there. Yeah, so it's an area. So there's a high, there's a high, there's a high, there's a high, there's a high. This is all selling the same price, but it's not selling the exact same price. So what I will be doing is placing a line at yesterday's high and the previous day's high, and saying if yesterday's high has a zone around it of X ADR, so whatever the ADR is, we'll probably pick something like 0.1 ADR or something like that, just to draw a zone around it and say, when we get to this area, we're going to sell it. If it gets above that area, we don't want it anymore. So we're either going to get that or we're going to get a reaction and pop. Yeah, but most of the time you will get a reaction because there's limit orders triggering. So that's the next step after we've tried an opening range breakout, is we're going to try a bounce play. Then that bounce play will either work or it won't work. If that bounce play doesn't work, then we have the option of either doing absolutely nothing or we could try a pullback. So if we break this zone, the likelihood is it's going to retest that zone. So we will buy it again. It's what's called turncoat resistance. Yeah. So when we hit that resistance, we will bounce usually off of it. If the buyers are going to rally through, what we're forming is a trend. So then we will enter when we retest that market structure. So that's the next trade to take. So it's just a case of programming the logic to go, what has happened so far today? We've had a clean break. We've made our target. Right, do nothing. We've had a clean break. It didn't work out. We've stopped out. Fine. Now what should we do? Wait for a bounce play. So we'll take a bounce play, see if that works. That didn't work. We haven't got our money back. So now we're down 3 trades. Okay, so now we're going to try one more. If it breaks that high, we're going to do a bounce play. And we're going to try and get back the loss that we've made today. Get as close to break even as we possibly can by the end of the day and then stop. That's it. So there's only a certain number of things you can do because the market has only got a certain number of ways it can finish a day. We just need to say, right, so far today, that one didn't work. That one didn't work. The candlestick looks like this at the moment. So now the only thing we've got left is hopefully it's going to be more bullish than it is today, which means that this breakout has got to retest and close at the top. But that target has got to be smaller than the opening range breakout target because we've done a lot of the day's movement already and we've been unsuccessful at making money. So each individual trade has got to have a different stop loss and a different risk reward based on it to make sure that it's achievable, because we are going to run into weekly support at some point, and that is a point we want to be selling. So if from here on our bounce play to there is 1.5 R, that's all we're going to get, because we need to get out 1.5 R because the next trade is going to be taken as short. So it's about adjusting targets and thinking logically about the market, basically, which is what good traders will do intraday. Is they will sit on their hands and do absolutely nothing and wait for these plays to set up, which is why I trade this strategy, because gutted. Stopped out of the DAX. That's really annoying. Trailing stop got me because we went over 2R. Nothing to do with it. So going to take a loss on the morning unless we get an ADR. Oh, that's the NASDAQ. An ADR on the FTSE. No, let's have a look where we're going on the FTSE. So that's 5R to the downside. That's 5R to the upside. Absolutely massive. The range is really small at the moment. So I'm going to pull back down to, funnily enough, exactly what I've just been talking about, which is not a coincidence. And on this particular day would have been exactly the play we would have done, which is a short bounce play. Yeah. And yes, and this day, look, yesterday's low, bounce play. Yeah. So these happen all the time. So what this EA is going to do is going to give me the information as well, or you, everybody, the information on the statistics on all of these as well. So that's my target to the upside on the FTSE, and downside target a little bit trickier. I'm just going to come up to previous day's low because that is an incredibly strong support backed up by a propulsion add at ADR. So there's a lot of confluence there of exhaustion and multiple buys for an exit short. So obviously it's breaking short. Now the DAX is going to break short and go to target, obviously, because I'm out. I knew it. So, and this is the trend pullback play, yeah? So very, very obvious market structure going in. Yeah, that's a short. Trailing stops. Again, trailing stops is something we can add in, but I probably wouldn't use them. Because of this, it's very frustrating. The amount of days I've been stopped out with trailing stops and then it's gone flying to target has been numerous this month. So the 11K I've made this month is actually too small. Should be much bigger, but trading stops are there to protect the account. So anyway, so that's the plan basically for this. So one of the things that I'm going to be looking at is for the people that want to trade prop, is basically if they set you a drawdown limit of 3K, yeah, that's your maximum drawdown, for example. That is basically what we're going to use as our loss. So one of the things that is really good to do with prop and an easy way to pass prop is you go basically boom or bust on it. Yeah, so if they give you 3K to play with, we can split that 3K down into, say, 4/5 trades in a day, and that would set our risk basically at maybe 750. So every single trade we take is going to have a $750 loss. We got the opportunity of taking 4 trades a day to try and make some money. That's it. If we have down days, I'm going to be looking at what happened yesterday. So if we had a down day yesterday of, say, minus 700, what's going to happen today is my goal is not necessarily to hit my 1400 target. It could be that I want to hit a 2100 target today because I want to hit today's daily target plus make back that previous loss. Or it could be I want to make back that previous loss and stop trading. So my P&L is going to do that. Yeah. So get rid of that day. Ideally, we want to make some money. So if we've had a $700 drawdown and our P&L's gone like that, my ideal personally would be to make 700 the next day. So we're cancelling out that loss and we're making progress on our account. However, going for a big day of 1500, 2000 is probably not the best thing to do. It's best just to try and get that loss back and make a little bit today. Don't forget, if this was your real account and your target was to make, say, 250 a day, yeah, that's $5,000 a month. We can live on $5,000. Well, most people can live on $5,000 a month or £500 a month, whatever it is. That's all you got to do a day. So if you take one risk at 250 and get a 1-to-1 risk reward ratio, done. Stop. Yeah. But if you're down 500 the previous day, go for 750 today. Don't get greedy. Yeah. So we're going to have an upside target, which is variable depending on how the days are going. Again, this is what this is all about trading. It's not about setting a robot off and doing a robotic thing. It's about how are we doing this day, this week, this month? How is everything going at the moment? Because we need to make goals, long-term goals, not day after day after day. So if we've made a bit of loss, let's try and grab it back. Yeah. So it's going to have a lot of variables in it. So this is where I've got to so far. I'll enlarge it. So as I said, the strategies that I'm looking at the moment, which I know work and I've got edges, I've used them many times before. They are successful strategies. I trade them every day live and have done for years. Obviously ORB is the first one. So this is mainly index based, but again, as I said, we can use this in forex. We just can't use that one. But if we have an EA that can trade multiple intraday strategies and you only want to trade yesterday's high and yesterday's low bounce plays, fine, these will be turned off. Yeah. So it'll be configurable basically. And again, it's one of those things where you may look at a day and go, well, today we're bang in the middle of yesterday's high and low. Yeah. So I don't really want to trade a yesterday's high-low pullback because it's 1.5 ADR away because we had massive news yesterday. So I'm just going to focus today on propulsion gap pullbacks and see if we can make our money out of that. So it may be that you want to adjust which strategies are tested or traded every day, because the market, when you look at it, you might think there's absolutely no way we're getting anywhere near that today. So there's absolutely no point in trying to trade those. We need to be trading on the way to them. Yeah, but I'm trading pound US dollar, so I haven't got an opening range breakout opportunity. So today I'm going to use ATR breakouts, and I'm going to try and get in on pullbacks. Yeah, so it needs to be configurable, but ORB, obviously, now there's multiple ways we can trade this, and the opening range breakout EA already does this to a certain extent. We can trade the pre-market. There's your open, so we can set an opening time. We can then say, right, trade a pre-range and hope that we get a explosive propulsion open. If we get a whipsaw open though, and we've traded the pre-market, then the decision-making process is, shall we trade the 5? So, okay, well that didn't work. So now let's try the 5-minute open, or 3-minute, or 1 minute, depending on what you want to use, or the 15-minute. Yeah, but we'll try a second breakout maybe. Yeah, so if the first one fails, because basically price triggers, stops, yeah, we are losing 2 trades. We're down 2. Don't forget, we only got 2 or 3 trades a day that we can take, maybe 4, maybe 5. So if we've used 2 of our shots, if you like, think of this like bullets. If we've got 5 bullets a day, we've used 2 of them on the opening range breakout. We may not want to take another opening range breakout attempt. Let's sit and wait and see what the market does. And then we'll wait for it to run up to a high or a low. But that high or a low has got to be within reach. So I will want to be measuring the distances between all of these elements as well. But ORB, ATR breakouts, previous day's zone bounces. So what we basically do is say that's yesterday's high. Easiest to do is look at it on here. Yeah. So look at it on here. Look at it on a chart that's easier. There we go. Can't really see them. My lines are a bit weak, but that dotted line there is yesterday's high. That dotted line there is obviously the previous day's high. This solid line there is the weekly high. Obviously, if we are going to get to yesterday's high, that is within ADR and achievable, so we could use that as a target. This is not going to be achievable today. If it is achievable today, it's a reason. If it's done 200 ADR today, we probably do not want to be trying to mean revert a 200 ADR move, do we, on an index if something's gone wrong, but or on an FX pair potentially. But you've got the previous day's high there. Now the logic would say, and this is a great example, so there's yesterday's low and there is the previous day's low. Okay, so if yesterday's low and the previous day's low are within range of each other, we draw a zone around both of them together, and we have a wider stop because we need to adjust our risk based on what we're seeing on the chart. So the logic's going to be about drawing zones and using those zones as invalidation points. So we're either going to get the bounce or we're not going to get the bounce, but we can reduce risk as the trade starts to work if it starts to work. Yeah. So previous day's zone bounces will be a sort of a clever logic in that it will put the yesterday's high and lows and the previous day's high and lows together and merge them into zones if they're close enough. So if you've got like today's chart, which is a really good example, if you've got yesterday's high there and the previous day's high there, which are roughly a quarter to a third of an ADR apart, we'll try that. If that doesn't work, we'll try that, because one of them is likely to work, because by the time we've tried both of these zones, we've also achieved ADR, which is exhausting us. So if that one don't work, that one's got a higher probability, hasn't it? Yeah. So don't forget, all we're looking to do is try and get ourselves into profit. So we can't take an ORB on this, but with this one, we would just take that or that. Yeah. If this is within range, We'll have a look at that as well. But we're only going to use yesterday's, the previous days, and last week's. Yeah, anything older than that, we're not going to be too interested in because we are working intraday levels. Yeah, it's an intraday strategy. If we get to a monthly level, we could trade a monthly level, but intraday you'll find monthly levels are more, we play around monthly levels a lot more, meaning that if you're setting tight intraday targets with tight intraday stops, you're going to get stopped out a lot more at monthly levels. Weekly levels are going to be much more consistent to get hit. Yeah, and it's going to respect them a lot more than it will a monthly. And with dailies, obviously, this is where the most recent limit orders have been placed. Yeah, so those ones we are going to get. So that was yesterday's low. Here's a perfect example. That was yesterday's low. That was the bounce from yesterday's low. So if you draw a zone around yesterday's low, your stop loss would have been under there, and that would have been the bounce play that you would have taken. Didn't work as a reversal, but it did work as a bounce. But if that bounced that far, let's say we get in, I don't know where, again, this is something that's going to be tested really, but I like to get in on a break of a high when we get into the zone. If we got in there with our stop loss, probably something like that, you got a 1R out of it. So we would be reducing risk and taking probably a break even on it, but we're not losing money. So the next thing we're going to try is the previous day's low bounce. Now we can't do that because the previous day's low is above that one. So what we'll do now is we'll sit and wait because there's nothing to trade. There would have been a last week's low, which is all the way down here, and we got to that day. So we'd have taken a last day's low bounce, but it's too late in the day. And again, stop trading this area because spreads are getting wild. We're going to get swapped overnight. So not going to be doing any overnight holds on this type of strategy. We need to be in, we need to be out, we need to have made or lost our money. That's it. We're not holding overnight. Yeah. So so that's basically the bounce zones. Another good strategy which I used to trade in stocks, and I'm going to test this intraday, but it's the in a row retracement. It's called many things, but basically you get multiple candles in a row, so 3 or 4 or 5 candles in a row. The way that I used to trade it was I would set a minimum. So I would say I want a minimum of 3 in a row. When I get 3 in a row, I'm looking for a setup. So this is kind of the setup. If I get 4 in a row, it's a better setup. If I get 5 in a row, it's a better setup. Then what we're looking for is a 3-bar reversal. Yeah, so we got a bear, we'll have a bear, we'll then usually have a pause, and then we'll have a push. That is the entry. Yeah, some people take it on the pause with a super, super tight stop. That is going to reduce your strike rate by using that, not waiting for confirmation, but you will get a tighter trade. Don't forget, we're looking to scalp here. This is intraday. We're not looking for holding the thing all day long. We're looking to be in and out within half an hour, maybe an hour on every single trade that's taken. We've only got 8 hours in a day to trade. We can't be sitting in stuff for 4 hours. We've got to be in, out. It hasn't worked, scrap it, move on. What's the next setup? That's the way it needs to work. So in a row retracements is one, and then propulsion gap, pullback entries. So if we are in forex specifically, intraday pullbacks into propulsion, but we need the propulsion to happen. So we'll be identifying propulsion moves and trying to enter on those. Yeah, stops there. They're not going to work very often, but when they do work, we've just got to recover yesterday's losses if there are any, plus make some money today, and then we stop. Yeah, all the other EAs that that you usually find out there, they continuously trade, and one of the reasons the ORB EA specifically has those, and the price action toolkit has those targets in there, is because that's what needs to be done to make money intraday. You've got to stop. It probably doesn't say, does it? No, but there's targets. So it's about making sure that what our job to do is to make our P&L go like that. Yeah. So all the time when we get this happening to our P&L, our focus shouldn't be on changing anything, but it should be on getting this back up to where it was before. So the focus becomes that. If you get a down day, your focus is to make the down day become an up day. If you get a down day followed by a down day, your focus is to get this down day followed by a down day recovered. Yeah. Not to make a fortune, it's just to try and recover your losses. So if you have a down day followed by a down day, which is say 3 grand, for example, you have an opening range breakout. The opening range breakout target should try to be 3K to get this money back. And then it's a case of, right, excellent, we're back to square one. What have we done? We've lost 3 days. Not a problem. We've got another 2 days left this week. So we're going to be monitoring the weekly monetary amount we've made, the daily monetary amount we've made, so that we can use loss recovery systems to dynamically change how we target these particular trades. So that's what I've got planned at the moment. That ADR, so the variables we need in here obviously is going to be yesterday's high, yesterday's low, previous day's highs, lows. We're going to turn those into zones, which will have individual highs and lows depending whether they need to be merged or not. What happened yesterday? What happened the day before? Because that should influence our decision-making process today. Maximum daily loss and maximum target. Again, depending on what's happened here and here, these will be variables, so they'll adjust as we go. And again, we can fine-tune all of this. Previous day's loss recovery target to get back to a P&L curve, and risk in money per trade. Now, your risk is obviously going to be reliant on your account size. So for small accounts, so another idea behind this EA is for doubling accounts. So somebody mentioned in Discord yesterday or the day before, I think it was in general chat. No, it was in position trading. Duncan, which I don't think is a member, but about getting enough money together to go full time. And one of the things I said to him was there's 2 ways to do it. And the way that I was taught to do it and the way that I did it was to first of all figure out what you need to start your account. So if you want to make 50k a year as a trader, you need to break that down, let's say, into 5k a month. Yeah. To make 5k a month comfortably, you should be realistically targeting around about 10% profit per month on average. You're going to have losing months, you're going to have much bigger than 10% profit months, but you're going to need a 50k account. So to get a 50k account together, you've either got it or you haven't. Yeah. So you're also going to need 3 months worth of money in the bank if you want to go full time as a trader, because if your first month is a down month, your second month is a down month, you still got to pay your mortgage, you still got to pay your bills, you've still got to feed your kids. So you're going to need a 3-month buffer in the bank to carry on as normal, assuming you're going to start off bad. Yeah, month 3, I mean, to get 3 months in a row losing is, if you're organized, it's not normal. I've had it in the past, but rare. So you're always going to get the money back because your strategy won't continuously lose, because the market won't continuously stay in the wrong regime for long enough to make you lose all the time, unless you're doing something really wrong. So you need, let's say, 5k there. So you're going to need about 65 grand in the bank. If you haven't got that, you can't trade. That's it. So you either have to run your job and then do this as a side hustle. And if it's going to be a side hustle, you're probably going to want to grow your account fast. So this is a kind of a way of doing account doubling quickly, is if you've got a 3k account and you want to make it a 6k account, treat it like a 3k account and basically use that risk a lot to try and make a target every day until that becomes 6. So you've got to try and double accounts on a regular basis. It's gambling. But what is prop? It's gambling, isn't it? They're saying, here's a 100 grand account, come back with a 6 grand target. I'm saying you're giving me a 6 grand account because I can't lose more than 6 grand. So I'm going to trade like it's 6 grand. My risk is going to be allocated on 6 grand. Yeah. And it's as aggressive as you want to be. So we've got to be able to control that money per risk because it's going to be different for everybody. But you want to be using ideally monetary risk. There are instances where I think there is an argument for increasing the risk. Yeah. So we could use some kind of martingale recovery type system, but obviously that will blow the account faster in a losing run. So, and again, some prop will not let you do it. I personally wouldn't want to do it on my own account, so I can understand why they don't want it done. It does work though, and this is why they don't like it, because if I get a lucky run with a strategy, I can easily double an account very, very quickly. But you've got to get that lucky run. So those are the input variables at the moment, and that's the plan so far for the EA. There was something else I was going to say then, and it's just gone straight out of my head. It was to do with money and risk. No, can't remember what it was. It'll come back to me at some point. So that's what I'm going to build out. So I'm going to spend the next X amount of time building this and testing this. And I want to get the data out of it, more importantly. Oh, that was it. It's just come back into my brain and gone again. It's on the verge of it's on the tip of my tongue. It's quite an important point. And I can't remember what it is. No, anyway. I'll watch the replay back and it will remind me. So yeah, so that's what I'm going to build out. So it can be based on that EA that I did with the breakout that I've already put out there. So we've got the start of the EA already, a breakout. Yeah, that is always really going to be your first port of call on the day. But what we will do is, as soon as the EA has a start time, and for forex we will also have a start time. Yeah, so you know, trade the London session. You want to be doing this while you're awake. If we are seeing that happened already at 8 a.m. because Asia is in a trend on the pair that we're trading, the first thing we're going to do is not look for a breakout. We're going to look for a pullback. Yeah, so that will be the first trade of the day. If we don't get that and it continues to do that all day, the first thing we're going to do is look for yesterday's high to bounce at. Yeah, so it's going to have logic built in that says, right, this is where we're starting. What am I trading? And what's happened so far today? Because what's happened today so far and what happened yesterday is relevant to what my plan today is going to be. Yeah. So it's going to have that sort of logic pre-built into it. What a brain. What, the EA's or mine? If the yesterday's high-low is close to the weekly high-low or monthly high-low, then does it make sense to play the bounce off the weekly compared to the daily? No, it'll be a zone. So it will become part of the zone. So the logic, that DAX, get trailing stops, guys. If you've been in my live rooms for any period of time, you'll know that I hate them with a passion, because they are what I call trailing profit removal tools. Yeah. I am now back down to, what was I, $450 in profit? No, I'm not. I've made £60, rather. This is a pound account. I must keep remembering it's a pound account. But yeah, just annoying. What was I going to say? Yes, yesterday's high-low weeklies. So basically the idea being, let's look at the other chart. Got some ADRs going off. Euro yen, pound yen. Is that another safe haven run? Yeah, more safe haven running happening by the looks of things. Strong yen again today. So yeah, those levels. So it's going to be a case of looking at zones. So there's yesterday's low. There's yesterday's low. There's the previous day's low. Absolutely miles apart. We got a weekly low there, which is, you know, over a quarter of an ADR away from that level. You can't draw a zone. I mean, the zone would be sort of that big. That's far too big. You'll get into that, and you could sit around in that all day and not go anywhere. This is intraday. So these zones, if they're close together, and I mean within 0.1 of an ADR or something, then they'll get merged together as one. But the rule is going to be, am I in a trade? Yeah. So we get to yesterday's, or let's say we get to last week's low. Yeah. Are we in a trade? No. Take a bounce. Yeah. If the zones are close together, what was that instrument I had this on? Where they were? They're too far apart. See, this is a good example. That that and that are totally different levels. It's all one big area, but on an intraday basis, these would be separate attempts. All of these would be separate attempts at levels. Yeah. But if they're close enough together that is what my planned logic is going to be. Look at yesterday's low, draw a zone around it. Let's do it. I'll show you exactly what my plan is, which is how I've always done it before. So I'm not going to do it exact, but let's say that is 0.1 ADR. This is a variable, so we can change this, the size of this zone around this price point. Yeah. So there's our zone. We get here, we try and take a bounce out of it. Yeah. If this was the previous day's low, for example, and this falls within this zone, we draw a little bit around that zone and make that full zone a big support area. We're going to have a wider stop loss on it than we would if it was a single zone. But it makes sense to use these because if this fails, it's probably going to test that. So we need to be below that if these guys are going to hold the market up. The whole premise of a bounce play is the limit orders are here used by the banks are still here. If they're here, it's going to bounce and it won't get through it. If they're not there, it's going to blow through it and we are going to stop out. But we need to find out where the overall low is. That is too low. Yeah, and these are all too far apart, so they have to be separate. But if there is a weekly line that falls there, and there's a daily line that falls there, these are the same thing. What's happened is this day we've bounced off the weekly level because the weekly level is older than the daily level. Yeah, so the daily bounce here is actually a weekly bounce. So we could just use that because it's already done the weekly bounce, isn't it? But we can merge them together and make a bigger range around them. But again, it's a variable. I can include or exclude weekly levels. And if they are excluded, they're not going to be used in the calculations. Yeah, this is actually quite complex logic and it's not easy to program. I've done it before and I've got an EA that has already got similar logic programmed into it, but it's messy and I'll probably want to do it properly this time. So yeah, so that's basically how the logic will work. And we are trying to find a way to sit on our hands, basically. Yeah, that's the key to intraday trading is let's try here. But if that doesn't work and it does this for the whole day, we don't do anything. Because there's nothing to do. If the market hasn't got a direction, it hasn't got volume, it hasn't got any liquidity to drive it anywhere, we shouldn't be trying to get in and out and guess. And this is what price action trading is, the Achilles sort of heel in price action trading is. You see a 3-bar reversal, so you take it long, it stops you out immediately. Yeah, and then you see a double top form and you jump in on that one. And let's say that stopped you out as well. But when you're reading price action is extremely good when price is moving. When price is not moving, price action is just chop drawn in candlestick pattern. Yeah, so each candlestick is showing you the chop, and it looks like it is a 3-bar reversal, but it's not a 3-bar reversal. It's just chop. Yeah, which is why I always said, you remember when we did the session on reading price action, why is that not a tradable pattern? Yeah. it's not a tradable pattern because it's not down here. Yeah, it's bang in the middle of nowhere. A 3-bar reversal happens at the end of a move. If the market's doing that and you see a 3-bar reversal, you leave it alone. If the market's doing that and you see a 3-bar reversal, you jump in as fast as you can, because this is exhaustion. This is just nothing. So the logic's got to be, take the trades at the logical areas, not just because. And if the market sits around after stopping you out down here and does this, you sit there and you do nothing. Because if you do nothing, you can't lose money. And if it takes off afterwards, we'll try and get in on the move, but we'll wait for it to take off. We'll wait for it to do something rather than sitting around and just chopping us to death, which is what the vast majority of people tend to do when they're trying to intraday trade. Because, you know, let's face it, this is algorithmic bank chop. We're trying to find patterns in chop. What we're actually doing is we're flipping a coin and hoping the pattern that we see is a mover. Yeah, but we need the odds on our side. So statistic gathering is going to be part of it. So I'm looking to want to turn every single, that's it, I've remembered it. Let me write it before I forget. What I'm planning to do is formulate this, which part of formulating this is we have to know what the strike rate of each of these setups is. So the opening range breakout, if we get a single clean opening range breakout at the open on an index, what is the strike rate on each of them of 1, 2, and 3R? Yeah, statistics. So if the strike rate of an opening range breakout trade on the DAX is 57% of the time it does a clean break to 1R, and it's 45% it does a clean break to 2R, and it's 35% it does a clean break to 3R, every single one of those has an edge. It's an A setup, which means we take it every single day. However, min max range has also got to come into it, because not all opens are the same, as we know. So with SIH, it's got a built-in logic that says I need my range sides to be Goldilocks zone, because if your opening 5-minute candle is that, yeah, that is 100% indecision, and you are bang in the middle of that high and that low. But if that high and that low is half an ADR, you cannot achieve a risk reward off of it. Your stop's going there, your entry's going there. You will not get the break to 2R. Yeah, so it cannot be an A setup if that range is too big. If the range is between 10 to 20% and the strike rate is 35% to 2R or 3R or something, that's an A setup. So if we've made a loss day the previous day, we don't want to be taking C grade setups that could be giving us more losses. We want to take the A grade setups that have got the highest probability of getting us in. And if we find the ORB is less effective than a support resistance daily bounce, we don't take the ORB if we've had a down day. We take the support resistance bounce if we've had a down day. Yeah, because the probabilities are higher. Yeah, so if you know that 60% of the time that works out to 2R, and yesterday you had a $700 loss, if we take a $700 risk here, the probabilities are 60% that we're going to recover yesterday's loss and make $700 on top, which gives us that positive move on our P&L. Yeah, that's how you should be thinking. And you'll see me, you see my brain go through this every day in here. Yeah, I'm thinking that will pay for that. It was going to pay for that, and it would have paid for that, and it has hit target. The bloody trading stop got me again. I hate them, but they're a necessary evil if you get failed breakouts. Yeah, just unfortunate today. But some days it's absolutely fine. Yeah, and some days it saves my skin. It means that I don't get 2 hedges. I only get 1, which is easier to deal with. So there's always a double-edged sword with everything that you do in trading, but it's deciding, is it better to use a stop or not? And if it's strike rate that I'm after, I won't. If it's capital protection, so again, logic. Should I be using a trading stop today? No. Why? Because I've had 3 positive days on the trot. Yeah. So I'm not going to use a trailing stop because trailing stops get hit. I'm just going to go for it today because I've had 3 positive days. If I get a down day, the week's up. If I've had 3 negative days on the trot, I've got to be cautious. Yeah, because I don't want 4 negative days on the trot. So today I'll use a trailing stop. That logic can all be built in based on what's happened previously. Yeah. And again, first trade of the day, don't use a trailing stop. Let's see if we can get that target and be done for the day. No, didn't work out. Okay, well, let's be a bit more cautious. Let's take the next breakout the other way, but this time we'll trail it in case we're going to go into rotation. Yeah, all this decision-making process that human beings go through because of what's happened prior to what's happening, the best case scenarios, we can get that data out and we can find out what is the best thing to do, which I kind of know because I see it unfold, and you do as well. You see it unfold every day, don't you? So so that's what's going into it. I'm going to put that in as a so this is also rough notes. This is how I basically put ideas together for development, basically. So there we go. So that's the plan. So that's going to be built basically. I've got so much of it already built anyway within other EAs that I use. It's just a case of grabbing bits and pieces and piling them together, but being more logical about the process and the steps that will be gone through. So obviously indices is going to have a different approach to FX. FX is going to have a different approach to commodities. So there are some that will work better on others. And it's a case of really getting those statistics out and saying, right, DAX ORBs over the last 2 years have not been anywhere near as good as the NASDAQ's ORBs. So what we'll do is we'll do ORBs on the NASDAQ, but on the DAX, we'll play yesterday's high-low bounces because it's more range-bound than the NASDAQ. Therefore, the probabilities of yesterday's high-low bounces working are higher percentage. They're the A grade setup. So we can see what the A, the B, and the C grade setups are for each instrument. And it may be a case if you only want to take A grade setups. If they're right needs today, don't trade. Forget the C's. If you've had a whacking great week, you've had 3 big days in a row, screw it. Let's take the C's today. See if we can milk some out of those. Yeah. Options, choices is what you need. But it's all chop. So everything I build is able to run on any time frame. So this can all be applied as well to hourly candlesticks. Yeah. Obviously, hourly candlesticks, you're going to get in way later, but you're going to hold it. And you'll probably want to do overnights. And for me, overnight holds are a lot more risky, obviously, especially on indices. I mean, that's a problem, isn't it? Yeah. So I'll be working on all the logic on it and getting it all sort of prepared, and we'll go through it. So if there's anything you can think of that you know of intraday strategy, and it's got to be simple, price based, no indicators, then let me know, and I can also sort of look at testing it and getting data out on it. But the key thing for me is trying to find those setup levels, because with stop loss based strategies, you really want to be taking the A+ stuff. Yeah. And that means concentrating on things like this. Yeah. Which we see playing out over and over and over and over again. Yeah, it's not coincidence. It happens all the time with a high probability. In this case, 100% over that week. That's an A grade setup, isn't it? That's an A+. It's 100% strike rate. Yeah, wait for it. Don't dick about trying to do stuff intraday that doesn't work. Yeah, we're trying to eliminate loss, not hit prop quick. That's what people want. So if this runs on a few instruments, then it can stop when its daily profit goal, like a portfolio over the day. Yeah. So yeah. So this is, again, this is quite complex logic. The SIH doesn't have this, and this is why I manually manage my trades, because I am always approaching everything I do in trading as a portfolio. New Zealand yen, and we've got these ADRs going off on these yen pairs. Strength coming into the yen again. So everything I do is always as a portfolio approach. Yeah. So yeah, it's a case of having, also, if you're using multiple instruments at a time, it needs to monitor that. Yeah. And you also need to reduce risk on them as well, because obviously if you're getting in with $700 or $500 risk, and let's say you've got a 3K limit on your account, that buys you 6 trades today. Yeah. And we could blow the account in the day. Easy, couldn't we? If you don't want to blow the account in the day, you set yourself a 1,500 loss limit and you take 3 trades today. If none of them work, they don't work. Tomorrow you'll have another 3 trades. If they don't work, reset. Yeah, if you're trading prop, or blown account. If you want to be conservative, $100 risk. Now we've got 30 trades we can take. Yeah, much more room for maneuver. Yeah. So, and this is something I do with prop, and I did with prop when I was with E8 and with my forex funds. I would hammer an account to get it passed, and as soon as I passed it, the risk is reduced down to 25% of what it was, because I don't want to blow it. What I want to do now is make money. But the other option, which I also did, was screw it. I'm going to keep the risk the same, and I'm going to try and bank $3,000 today in one go, and then I'll take that $3,000 out. Thank you very much. But a lot of the prop firms specifically now have minimum days. So again, with Top Step, I'm talking about because I'm currently evaluating with them. When you are on a funded account with them, an XFA, you have to trade a $200 profit 5 days to get paid. So what they're saying is, here's your funded account. Now show us what you did there is doable again. Yeah, if you can't trade and make $200 profit over 5 days consistently like you did in your evaluation, you're gambling. So sometimes that works, sometimes it doesn't. But what it stops you doing is going long 10 lots. Holy crap, 15 grand. Can I have that, please? No. Trade another 4 days and make 200. Yeah. So all this has to be looked at as a portfolio approach. If you're using more instruments, you've got to be either reducing risk or making sure that the whole portfolio has been monitored. So for example, today, this is a great example, isn't it? On SIH today, this was down here at I think it was 460 I saw there. This is at 307. Yeah. If my portfolio target is 150, job done. Yeah. It needs to close everything, close the lot. But if I'm not looking at it in that way, and say, for example, the ranges were wrong and that didn't take a trade, and it's only this trading, I'm not going to look at a portfolio target of 150 because I've only got one instrument running. So I want this instrument to try and get me to my 1,000 or 15 or whatever it is on its own. So the way that this trade is managed will be different depending on everything else. And again, there's an awful lot of cogs, which makes it incredibly complex behind the scenes. So there's stuff, and I'm always an advocate, as you know, for manually trading with EAs. Let the EAs do their thing. I haven't touched this today, but I am watching it and I am making decisions. So I can try and build as much of that as I can into an EA, but the decision-making process that you might want might be different to what I want. Even though I can say it can do this, it can do that, The numbers that are put into it are going to be different. And anything you backtest, you can't portfolio backtest. Yeah. You can in MT5 to a certain extent. But I don't think that decision-making process is something you can do. These are both coming off monthly lows, look. I mean, this is a really old monthly, actually, isn't it? Oh, that's the 1 month low. No, that is the recent. It's that one there. Chopped around it a bit there, but kind of holding. But again, there's a propulsion gap entry there that would have failed. I don't think these are going to be as good, to be honest. I've built EAs to do, we built an EA to do this, didn't we? Right at the beginning. Just, it's very, very hard to make propulsion gap bounces work. They're targets. They're not entries, in my opinion. Pullbacks. Somewhere up in, so, you know, value, in futures, there's a thing called the value area high and the value area low. In any trading, there is the fib pullback. And, you know, for me, a pullback up into the 71, 68, 61.8, 71.9 areas are the value because the risk is tiny. The reward, if it works, is going to be a break of the low. And if you want to just use the low for a double bottom bounce, the reward is always, always going to be double the risk. So taking a 50% bounce or a 38 bounce, for me, high risk. It works. It's a C trade though. That's an A, that's a B, that's a C. We can test all of these out, can't we? But yeah, that's another option for pullback entry. Your MRA has yesterday's high low. Yeah. The logic in but the logic in the market reversal alert, say EA, is very broad in the fact that it has to be above or below yesterday's low. So the market reversal alert EA, my indicator's really playing up this morning, and these lines keep going to the left instead of the right for some reason. Don't know why. But this is an exact perfect example. This would have been taken with the MRA EA. So there's yesterday's high. So the logic is, with the market reversal alert EA, if price is above yesterday's high and you get a reversal alert, trade. Not if it wicks. I mean, I think it has got the logic for touch and be above. I can't quite remember, but the logic for touch and then reversal, because it's a confirmation indicator, obviously the entries are you know, quite big from stop perspective. But the best logic for intraday trading is get me in. Just get me in. It has piercing too. Yeah, I thought it did. Again, this is something that was asked for by people, and there was millions of options it could do, and you end up just programming everything for everybody, and then it's just too complex. So the easiest thing to do is, as I said, trading is binary. Yeah. Sometimes it will be almost spot on. Sometimes it won't. Yeah. There's a million ways to get in. It's not about getting in, it's about getting out. Yeah. So I could say 8 a.m. on FX pairs that I'm trading with the EA on, place a pending at the high and the low of the day. Yeah, and we just get in on pending orders. Because let's face it, it's either gonna or it's not. Yeah. Or I could program it that you need to be touching the zone, and when it exits the zone, so we draw the zone around it, when it exits the zone, take the trade, place the stop above the zone, or place the stop above the high, because it either is or it isn't. I could build the logic to do, if it's gone above it and then it breaks below it, take it. I could do, if it's above it and it crosses a moving average, take it. There's 1,000 ways you can build logic to get into a trade. At the end of the day, it either does or it doesn't. And it's about finding out how often you get in up here. Does it work? If it's over 50% and you can get a +2R out of it intraday, it's an A grade setup. That's it. But, you know, it doesn't matter which logic you use. Sometimes it's better to use the draw a zone around it, yeah, and place the pending order there and a stop loss there. That day, that would have worked. That the next day, it would have still worked, depending on how big that zone is, obviously. But other days, it will hit that, it will pierce through it, and then it will go like that. And everyone will go, well, no, you shouldn't be using pending orders. What you should be doing is waiting for it to close above the zone. Yeah? Some days, I should. But can you tell me which of them? Because you've got to pick one. There isn't a, this is the way to do it. You have to just pick one. For me, pending orders is as good as anything. But the longer you wait in trading intraday, the more risk you have, the more difficult it is for that trade to play out. So a confirmation candle, i.e. we touch a zone and then we wait for the candle to close after it's exited the zone. Would you rather have that stop or would you rather have that stop? For me, that stop with $500 can make me $5,000. That stop with $500 can maybe make me 500 to 1,000. Now, they're going to have different strike rates. Which one do you choose? Yeah, whatever you choose in backtesting is not going to be the same repeated pattern. So you just have to get in. It's more about managing what happened yesterday and trying to stay on top of that P&L. Our focus is always on trading, entering, exiting. It's not focused on what did my P&L do yesterday. Like I said, today, I couldn't give a monkey's what happens. I've had a really good week. I'm having a fantastic month. That doesn't really bother me. Yeah, if I've had 3 losing days, livid. Because all of my profit-making opportunity today is gone because of a stupid stop loss. But that is because of, not because of the stop loss today. It's because of what happened yesterday and the day before. Yeah, that's the important thing, isn't it? We need to try and recover that loss. If you have a bad day, your focus should be on recouping the bad day, not on making $1,500. Yeah, that's a byproduct of doing the right thing, repeating the processes that work. Recovering that should be your focus, because your focus is to hit a target, not to make a fortune. Yeah, you've got to just tick boxes. And it's the same with your own account. Yeah, if you've got a $3,000 account and you've split it down into 30 trades, yeah, and you're going to risk 100 on each on a $3,000 account, for example, you want to be taking the best possible setups. But what happened yesterday, you know, if you're up 1,500 on your account and you're up to $4,500 and your target is to double it up to 6, your decision-making process at 1,500 after a losing streak might be different to what it was at the very beginning of using that account. That can all be programmed in. We can adjust what we do, can't we? So here's piercing to zones make sense. Yeah. Everything is a zone. Nothing is exact. Yeah. Always the way. Sometimes it is exact. Sometimes it's not. Yeah. This is all bouncing off of this level, but it's not bouncing at the same price point. You know, and certain days you're just going to lose, aren't you? There's nothing you can do about that. So there we go. That's really, really, really annoying, because that 3R target was worth £400 profit. So I've turned a £400 profit day into a £250 loss day, or £230 loss day. What can you do this afternoon? Triggering break even rather than a trailing stop in case price reverses. It does the same thing though. If I'd have triggered a break even on this trade, I still would have been broken even. you know, I've said it in the live rooms many times. Don't call them stop losses. Call them stop profits, because that's what they do. They stop your profit. Yeah. If you get into a trade and it goes into profit, and you place an order at break even to stop you making a loss, what it also does is it stops you making a profit. Because if market structure is going to do what market structure does, it's going to pull back to where you got in. It always will, and it will stop you out. Yeah. When a trade goes in your direction, does it usually go straight to target, or does it pull back, go into drawdown again, and then go to your target? That stops the profit. That is proof. And this happens so many times. I keep it in on this, and the reason I keep it is because I'm watching it. But I know that this is, in back testing, what reduces the drawdown, or reduces the hedges, I should say, really, in this particular case. But trailing stops, if you apply trailing stops to any strategy, we've done it in here, haven't we? We've in the back tester using the Swiss Army knife. I've run strategy tests. We've applied a trailing stop to it, and it makes it worse because you don't get the profit. Yeah, look at this. I mean, look at this is a perfect example of what I'm talking about in here. We looked at this on Tuesday. This thing in 6% profit. What did it do? Made a 2% loss. Why? Because it pushed up, didn't get to target, pulled back, got taken out at a trading stop loss with 50, and then does whatever it wants to do after that. And if it went down, it went down. It doesn't matter. But what the reason for this 6% profit turning into a 2% loss was because I'm trailing half an ADR. So price pushed up or down, and then it pulls back. Yeah. If you get in short here and you put a break, any kind of trailing stop loss that comes down with price, as price pushes down that far, your stop comes down that far. When price does what it does all day long, which is do market structure, you get stopped. Yeah. This is where stop losses, trailing stop losses, are amazing. But you're going to hit target anyway. So don't bother. If you're going for a trend strategy where you're looking for a long move to go to a nice, decent 3R, 4R, 5R target, go for it. But if you're going to trail it, what you're going to accept is either a half R, 1R, or 1.5 R, because every time it pulls back, it's going to stop you out with that. But it will go to your target. Try it. You can use the Swiss Army knife on any of the ones that I've put out there. They've all got the trailing stop facility in them. Do a test, get a nice P&L, apply a trailing stop to it, see what happens. It just doesn't work. But there are very good use cases for trailing stops, i.e., I'm up 1, I'm up 2, I'm going for 3, I'm going to trail this one, because if I can get a break even on it, it tells me I'll just take the 2 today. Yeah, but if it's my first trade of the day, like that DAX, that's a stupid move, isn't it, today? But tomorrow, it's not a stupid move, because the DAX goes and hedges tomorrow, and I'll be going, see, my trailing stop saved me. Flip a coin. I don't know which it is. Every day's different. You can't use one thing every day and get the same result. This is the problem with trading, isn't it? Let's see what the lazy trader's doing. Lazy trader's banking a bit more. That's going to take a loss, that pound US. It'd be interesting to see how much loss we take on that pound US. It's going to be that trade there is going to stop out somewhere down here. $190-ish. So it's going to wipe out roughly half the profit. That one there. So, yeah. If it happens. Obviously, if it doesn't happen, it won't. We'll find out. Stops are there to be taken, like magnets, they attract price. Yeah. It's an order. Like I said, you know, this is why position trading doesn't use stop losses. Stop losses are there to get you out of the market. It's an exit strategy. And if your stop loss is in profit, it is still an exit strategy. And you're just saying, don't give me what I'm after, give me what we get when we pull back. But it's sometimes it is a very good thing to use. But it just in my experience, and a lot of traders share my view on this, I think that, you trail it because you're worried. There's the fear. And how many times do you get out too soon on a trade? You get into a trade and you go, oh, I'm going to get out there because I've seen a red candle. And you go, phew, that was a nice trade. And then it does that. Yeah. Every now and again, you'll get out there and it will do that. And you'll be like, trading stop saved me. Most of the time, it just doesn't. And the trading stop just stops you making the profit that you would have achieved. It's just, but there is an argument for reducing risk. Yeah. So the reason my pullback strategy has that trailing stop is more to make the distance of my risk, if the trade starts to work, is just to reduce this down. What I'm looking to do is reduce this down. I'll still take a loss on it, but I do not want it moving into profit as soon as possible, because that is going to get hit way more. So reducing risk is good. The reason this hasn't lost as much money as it could have done is because it's been reducing risk on a lot of these trades. Can't actually see any trades on here, but so if we look at, let's have a look at one of these. This would be a really good indicator. Let's have a look at one of these that made a break even. So there's a break even on the US dollar yen. I'm on it. There we go. Let's drag that on the chart. Right, so we sold it here. Pushed down, took a little bit of heat. Pushed down, decent. Took a small loss, pushed up. It's now back in profit again. It's in profit, but we're not. It is, but we're not. Why? Because we stopped out. Not the good thing to do, was it? Let's look at this one here, which made 25 US dollar Swiss. Sold it, pushed down, took a small profit, pushed down, pushed up, would have taken heat, pushed down. We're back to break even at the moment. This trade could do that, go down to there, and would have banked 1,500, but we're never going to find out because now we're long. Yeah, and if this now collapses down to here, what we're going to do is take a loss on this, but we won't get the profit off of that. And what whoever it was earlier was saying about having the potential for this, it was evil, wasn't it? Yeah. About having this trading in both directions, there's an argument for that, isn't there? Because if this now collapses down to target, but we've got to remove the trailing stop element of it, because we're looking to play risk reward, aren't we? So there you go. You got to go, evil. Okay, cool. Catch up the rest. There's not going to be a lot left, to be honest. I've covered everything I wanted to cover today. So this one, 304 on the pound Swiss. Let's look at that one. So that was a stop loss. Yeah, so target on that trade was there. So we've stopped out on a trailing stop. We're making a lower high. So potentially we're going to lose that much profit if the trade plays out. But that was actually a good trailing stop, wasn't it? Because it made $300, which isn't bad. But the target on the trade was 830. The target on the trade was about, I would say, 550. So we've lost $250 if that goes to target because of the trailer. So it's reduced the profitability of the trade. But it's horses for courses. It really is. It's a total mixed bag with this with trading stops, which is why it's such a contentious issue with everybody, because everyone will argue it's really good and they'll show you loads of examples of where it's fantastic. And then they'll turn around and go, here's a load of examples where you didn't make any money and I would have quadrupled my account. So it screws up your P&L. Stops are there to be taken, yeah. That's why I find it hard to use stops after started position trading. I'm even scared to use aggressive drawdown because it uses a stop. Yeah, but that is a traditional trade, isn't it? So already see the dollar signs in the eyes of the broker. Yeah, you know, and I've shown many examples, haven't I? Especially with this strategy that we tested, the overnight from 9 till 1 strategy. You know, that basically was making losses because of stop losses and trades getting executed on spreads. You know, it's just they don't work. Stops are there for your orders to be executed at a specific price point that you've requested. You know, it sounds a stupid thing to say, but who are you to tell the market where you should stop out on your trade? It's nothing to do with you. The market will pay you what the market needs to pay you. You are trying to force the market to pay you something. Let it pay you something, and either it's going to pay you a ton of cash or it's not. But let it decide. Entering a trading stop loss removes the decision-making process from the market. So all the trades that play out, you don't get the money. But you don't take the loss, which is right, which is wrong. It's a debate that will never go away. It's going to be there forever. This is a painful market today. But target was I don't think I would have got executed on that, to be honest, because the spread, that is literally hit the TP line to the pip. With the spread on that, I probably wouldn't have got executed, but you can guarantee I would have got out there anyway, because if I was watching that and I saw a green candle come off of my TP, I'm having it. So that's pushing right back up now. Look, I think we can do with it today. Right, that's it for today. Anybody got any questions? Anything else they want to discuss? I don't know how long we've been going. 10 o'clock, 2 hours. Trying to keep them short, but now we're only doing 2 days a week. We can have them longer, can't we? So I'm going to be working on that in the background constantly, and we'll update on it. The Lazy Trader EA, I'm going to set the version 3 of that live today, and just going to keep monitoring that, but that's working really well. So we'll see how that continues to pan out. Yeah, and then we'll go from there. Somebody asked me, who's not actually in here ever, but they are in the members group, so they're watching on replay. Asked me to do the position trading bootcamp, if you like, live. So just basically go through the content of the position trading bootcamp again, but do it in here in a kind of off the cuff, off the type scenario. I don't know what everybody's thoughts are on that, because I've already got the position trading bootcamp obviously out there, but stuff's changed since I did that. Obviously I'm not using market reverse alerts anymore, for example, but it doesn't matter which you use, but the principles are all still the same. So I don't know what your sort of thoughts are on that. I'm sort of in two minds as to whether or not that's actually worth spending time on. But it would kind of give an updated version of the position trading bootcamp, I guess. Things have changed, but I've also covered some of the content that's covered in the bootcamp in much more detail in some of the videos we've done, like how the market moves is kind of the first part of the bootcamp, but in a more detailed way, fundamentals, that sort of stuff. So I don't know how much I've covered already and where I should kind of pick it up from. So let me know your thoughts on that if you've got any. But I'm in two minds as to whether or not to do it, because it would be something that would need to be delivered over probably a week or two if we're only doing 2 days a week. But it might be good content. I don't know. But let me know. Right, I'm going to be working on that EA moving forward, and we'll update on that as we go. And as soon as I've got something that's that's usable, I can start releasing the version of it for testing, and then assuming it's decent, we can start using it. But you know, it's going to be one of those EAs that I'm going to be looking for it to do things like this at times, and then other times do that. That I don't care about in prop. That I care about in prop. So it's one of those EAs you could put on an account, and it's either going to blow an account or pass an account type thing. And it's going to be able to pick A+ setups. What I'm hoping is that we find a long-term edge in everything. But it's everything that I do. So I know there's a long-term edge there, but it's whether or not you can replicate the human aspect of it. That's what I'm trying to do without using AI. Greg Secker. New lower high going in and a double top. Divergence could be turning point for a next leg down. May not be. Something the EA would look at. Right, I'll leave it there. Anything you need, let me know. I'll be in Discord. Other than that, back tomorrow morning at 8 o'clock. And obviously we will do the end of week wrap up. All right, have a good day. Anything you need, let me know. Otherwise, I'll see you next time.